What's going on, everybody? I hope your Friday was as exciting as ours, man. Well, if not, and if you believe in the statistical fallacy of the hot hand, you should see us on stream. We've been on a pretty good streak, but I'm going to give you a gift. We're going to talk about option pricing and mispriced options, or how to tell if an option is cheap. I'm going to show you guys by posing a question and examples from today. We're going to go over today's trades. I would give you guys a recap of the market. Really, it was a lot of earnings and no real news. We got the GDP stuff, but for the most part, there has been nothing but earnings. The market has been responding to that. So really, I want to show you the plays we made. We made a few today. You know, not too bad. We're going to talk about Tesla, and then I want to talk about Intel. I have United Health up here because we killed that one. But I want to talk about what happened with Intel. Even at the end, it had two pops. There was some deal with Apple. It went crazy even today from their earnings, but then also Tesla as well. But there was mispriced options. Every single one of these plays, I want to focus on those two. You know, we made the Disney. We sold out of those. We bought those yesterday. UNH was one. I messed up on the FedEx today, but we're going to go over these, and you'll even see the BA, the Boeing from yesterday, but there's a lot to talk about. So drop a like on this video, but now, more importantly, you're not posting a watch list. I need you guys to actually interact here. I have important questions for you, especially if you truthfully and really want to understand how to understand option pricing. Is it a cheap option or really mispriced options? Because that is the point of today. Oh yeah, and subscribe if you guys are new. But yeah, thumbs up, all that. But the point here is today was one of those days. I want to show you these plays. We missed. So again, we hit a lot of plays. You know, we played the Disney, or, you know, if you even want to see this morning, we played these yesterday, excuse me. So these were swing trades. You guys didn't even need to day trade these. So, and again, I rolled over and I explained that on stream, what we did. And that was just to keep it going. But the main thing, when was it? Yeah, we bought it yesterday for 27 cents. And which one was it? The 235 for this week. So again, and it's great. I'm doing this video now for you guys too, because after today, these options are going to go away, so you can't really see them again. So Friday is your only day to study these, my friends. I'm sorry, but and you see again, this is the point I'm going to show you with this play. You know, and you could go. There's a bunch of the UNHs. They went up a lot. These went up at one point. They opened up at 16 cents, and they were as high as $2, and they even closed at $1.30. These closed in the money, so we bought those even yesterday and ended up closing in the money. And again, if you've been following along with the strategies and been coming to the live streams, paying attention to the lessons, then you know that is the objective. Pay a little bit amount of money to get in the money and, you know, be able to leverage these expensive stocks. But there's that aspect of it. So I just got straight into the video, and even though I put this in the title, I wanted to cover Intel and Tesla and them going crazy, but Intel especially went nuts, and we made a play at this. And again, I went over a lot of the other plays here in the rest of the video of today, but we played these. I got these even for next week, the Intel 53s. Got them for 38 cents. And, you know, they closed up a lot, you know, even during, it was, you know, honestly, it was crazy during the volatility on there. You know, shout out to Stream Alerts. We were on even a 11 at 11 call when this happened. So there was two things that happened with this, and really why I want you guys to see this first, because the option chain is going to be interesting. I want you guys to see how this plays out. And again, the expectations, because this is still a low IV. Look at after the drop on the next week. Intel doesn't move much, and it even got a bunch of downgrades today, but they were only like $1 or $2 downgrades. So again, I'm not going to tell you why. I ask another question here, but I'll ask you, why do you think the downgrades were only such few dollar amounts for Intel, and why is the implied volatility so low? This will help you look at mispriced options and pricing. So I want you to answer that, but look at that. We made this play and we got it, but Intel went crazy today. They just dropped about 8.8% total. First, because of the bad earnings, and they cut guidance. It wasn't good, and it was weird because they announced in their earnings that they're, you know, leaving out a part. I even said it, if you go pre-market on the stream, I say it in the morning, that they're leaving a segment out now that Qualcomm is going to be able to take over and like the Apple modem business. But that was the news here, and some people said that it first came out as an Apple Intel deal, and then it got updated as they were in talks with the deal apparently. So I guess it was kind of like a further update. However, it led to some pops, and it really brought the market up, but the market kind of started coming down, and it kind of muted it. So it was weird, but it popped right at close, and then right at the end, it went up to 52.40. But there was a lot of weekly strikes there, and isn't it funny? They kept it there. So watch that over the week, but that's going to be a good one in general. And even then, those option prices, and again, there's another, remember the trick I showed you with Qualcomm? Watch what happens when you start going a little out there. But these ones are going to be crazy, I think. They're going to be interesting to see. So you guys get to see those now. Make sure you're on stream so you don't miss it. And then Tesla, this is kind of coming off of yesterday, but again, they had their earnings, and it was bad. And then a car blew up in China spontaneously. But this is an interesting topic right here with their options, even today. But even if you go out, like go to the May 17th, even the Junes, imagine how bad this was today. They broke a 2-year low. It looks so ugly on the, you bring up a chart for Tesla. This just doesn't look good. It looks like they're dying. Everyone's getting excited. You should see all the Tesla haters in the chat. I love it. But look at the puts, even near the money, they only went up 40% today. And again, the weeklies, we pulled up, I show you the 1,000%ers here, but they're still lower than they were for earnings. So think about what this is saying about option pricing. And essentially, they were pricing it in prior that, that they were expecting a bigger move from earnings. So there's that and another factor. And then there's a way, if you wanted to see what this contract was really priced at, here's the thing. Go back 1 month, and you're seeing, okay, it's below the 1 month price. Well, go add 1 month to the contract now and see, how are these contracts? You'll notice, it says 220s. They're actually higher than they were a month. So that's like kind of comparing that, if that makes sense. But that's kind of a question and an answer in itself. But I'll leave you guys with that in the rest of the video. Here you go. It made a big move, but it wasn't just UNH that did this. So we hit that. We also hit the Disney. We bought Disney's yesterday for 19 cents, the Disney 139s, and those expired today. And again, I explained these on the watch list video yesterday, and we post those every night at 7 p.m. Not on the weekend, so you guys better enjoy your weekend here. But I know some of you got the 138s. You shout out if you did. I know you were there. I know you were on stream. Shout out everybody. And that's why too, we even have the the stream alerts, but we talked about it today. Really, it's called Stream Insurance. I think we're going to change the name to. But I got the 139. I chased it, and you still could have played it today, and this came up on the watch list. I even put the UNH on the watch list as well too. So these were all on there, but I said watch these contracts with Disney and how it's been moving. But these went 20 cents to 80. They fluctuated all over. But remember, we bought these the day before for like 19 cents right there. So we got a decent gain. They were cheaper than that earlier. But it actually, again, those closed in the money. Disney did well. But that's still a big gain. Even 20 even all day today, $20 to 100, 500%. You saw the UNH. Now here's another one. And I'm going to go back over the strategy with looking at, again, and everything I'm showing you is leading up, because all of these big gains, why did they move so much? You guys see what I'm showing you. XLNX was one of them, and you guys could go watch the stream at this time. I snuffed this call simply because I thought it was too expensive at the time. I think it was these ones right here. Let's see. Because look, there's a window. You could even see we had literally a 20, 30-minute window. They were going for 27 cents. I was like, nah, they were just at 10 cents. I'm not down with it. The 116s, and they closed at $2.60, $3. And the crazy part is a lot of these closed in the money, which is nuts. But again, that's 1,000% in some change. And then Tesla. And again, if you guys saw this on stream, someone should go tag all these parts of the stream, or I'll go make a montage. I called out these contracts. I even said the 235, but I was like, nah, that's like a 4% move. These closed in the money, but barely worthless. But again, these went $24 up to $370. Another more than 1,000% move. So why am I showing you guys this? This is to answer your guys' question. how do you find a mispriced option, or is an option cheap? Is an option expensive? So this is where I need you guys to interact. Do you guys think what happened today, do you think that options are cheap, or is this normal? Because that's what happened today, and this is what I'm saying. I missed a lot of these trades. I called them out, and that's what I'm saying. If you pull up the timestamp from the stream, what's so funny about it is I missed these, and I didn't want them, because even Tesla, it was already down 2.5%, but I said another 2.5% today. The market, it's been, with the volatility with like the S&P 500, you have been seeing, it stayed the same. It's just been up and down, but a lot of individual moves, S&P will be red, Dow will be positive, all this mix. But I thought it was already at that limit, and I was like, it wasn't pricing in a lot, and that was the next thing too. If you looked at the options, a lot of the options, why were the options cheap today? People weren't pricing in big moves. People weren't expecting a lot. The market was pricing in a little, and really I believed it, and that's where I'm saying, is this an option mispricing? But I believe it is, and this is what I'm saying. I got some of them, but I think I missed out on the opportunity because I think I conformed a little bit too much to the market. I read into, I'm seeing that the options are cheap for a reason. I'm like, okay, the market wasn't anticipating big moves today. After all the earnings, we've kind of been seeing the same thing, but we saw all these things slide. Even Amazon, I forgot. I called out these ones too. That was another one I forgot, the 1950s. These still closed with some value, but these were 30 cents or so to $3-4. And again, you had all day to get them. And I said I misjudged the velocity. And I believe that's really what I thought I knew it was with everything today, is that at the bounce, it was going up. I would have, I wanted to get the calls here, but I didn't. And the calls went up a little bit. And that was the moment you grab around here. But then at the same time, if it dropped, I figured if it dropped and it kept at this pace going up, going down an equivalent amount, it would have killed those contracts. But the pace actually, it looks slow, and it was slow, but it was faster than the market was anticipating. And that's what I'm saying. The market was pricing in that this velocity was going to be slower when in fact it was fast, because it kept going it wasn't fast moving today. It was like a medium speed, but it didn't really slow up. But again, the whole point is looking across the board, you see a lot of these moves. Why was there so many 1,000% movers? Again, one part is Friday. And remember, that has been the strategy we've been talking about, push it into the wall. And that's what I've been saying with these contracts. You wait and you wait and you wait and you get those moves. Even Qualcomm, I forgot. Qualcomm did it as well too. If you guys saw that, I even said Qualcomm, and I gave it even the 87s and whatnot. The 87s, we were just outside, but the 86 and the 85s, I called these at 25. I didn't take them, but they did the same thing. They dropped around 20 or 30 cents, and then they shot up. But again, similar story with every single one of these. The market wasn't really anticipating this much of a move, but there was clear. Why did options all do this? There was some pricing around the board. Again, I just think with it Friday and the earnings not moving, there wasn't much, but I want to know what you guys think. So this is going to open up our discussion to option pricing and mispricing, and that's why I want you guys to participate, because your answers we'll see what people think, and what people think, you guys, that is the market. That is the market implying things. It's very interesting to think about. So there was that, and then those plays we made today. We made the UNH, and I think I'm going to make another video on this one. But we played this in the morning. But if you guys watch the watch list, I put this on there. I said, you wait for this one to blow. That's why we got it yesterday, because it had, again, earnings, the healthcare news with everything. But it had big moves in it. It's usually a slow mover, but since Monday, it really was moving slow. Think about it. Monday, it was coming off the bounce. It went up a lot Monday. But the volatility, it went up Tuesday, but then Wednesday didn't do anything, stayed there. We got it Thursday, and then today it went up, and there was a good time, but it still had a little bit of move. And healthcare did good today, but the whole point with this one I want to show you guys is rolling it over. So that's what we did. Bought it at 27 yesterday, and then we sold it today at $10.08 for $1. So again, I sold it at $1, and that's what it closed at, but I could have got more money for it. But again, if I held it and took the risk, I could have got $100 more. It dropped at one point to 68 cents after that, closed at 130. So I sold pretty good. But what I did, this is rolling over, and I explained this on stream, and this is a light version of that. It's literally rolling over usually means, for those who are unfamiliar, you sell out a contract and then you buy another one. I said it today on stream, the example, keep rolling. You're just rolling it in, man. Keep it rolling, baby. It's when you take one contract, you see in this case, we had a UNH call and we sold it. But then we wanted to still play the call, so we bought another call. But now usually what rolling over is people, they sell out, and instead of, we were on the April 26th, a traditional roll usually would have been going to a later date on the call side. So again, you're still in calls and then you're still going to be playing it, and then you get another option. Sometimes you could spend more money and get the same strike price at a different date, or you could go out of the money and spend the same amount of money or even less money and keep some profits. But that's what we do. My logic, you're in a play, you want to keep holding, you think it could still go up, it's already going nuts, you got it at a good price. You could sell out, take your profits, and go to another strike price or another contract date. But in this case, since it expired, I thought it could still have some, it was really strong off the gate with Anthem and everything else and the healthcare this morning. I wanted to go into it, so I sold out of those for $1 because, again, these were going up. I didn't want to, it was Friday. If it dropped, it was already early in the morning, and that's a key. Why did I sell when I did? Is that this was, again, it was Friday. This contract was going to expire. It just went from 15 or 30 cents all the way up here. I think I was around here at like $1 right before, but it made this big move. If it dropped by, 10 a.m., 2 hours in the market, if it dropped and came back down and didn't close in the money, I would have been out of luck. So I wanted to sell out, but I said, hey, this happened last week with UNH. If you saw UNH, or the watch list, you guys saw we've been playing this. So it makes that move. I'm like, all right, I want to stay in it, but next week is kind of expensive on it, or I think they're too far of the money. And again, I'm just trying to take advantage of the short-term move if it did make another $2-3 like it did today on the stock. But I said, okay, I'll roll over, and I got the 240s, and it made more sense at the time. You're looking at that, you're like, why would you buy that? The stock was going up, but the point is, I put $30 in those. I think I got 3 of them. So now I sold out. I got my $100. I put $70. I kept $70 in my pocket, put $30 back in, and I'm in a different contract. And now, worst case scenario, I could lose $30, and I did. Those expired worthless, but I still got to play it in the event that the stock kept going. I would have gone up on it. So it didn't, and that's that. But that's the rollover. And Disney, I sold out of that one. I sold that out early. But that one is also an example, though, of swinging those contracts, even though they're weeklies. You guys, and again, you have to be selective with the strategy. That's why I tell you guys, you paper trade this, you will be good to go to, paper trade these for a few months. You'll understand how contracts are working. You got to kind of understand that, but it's getting into money. But we held those, we sold those, but I think those are all going to be interesting next week. So I'm going to talk about all of this stuff, definitely coming into the watch list on Sunday. Be ready for that. Let me know your guys' thoughts on this, but I want to know, what questions do you have? Give me some other video ideas or stuff you want me to cover this weekend. If you made it this far, you are a true cult member. I love it. It's going to be another crazy week, I think. We got a lot in the cards. Oh, my gosh, I forgot to explain Intel. Dang it. So I'm going to go record that and put that at the beginning of the video. But let me know what other ideas or stuff you want me to talk about. If you guys have questions, I know we got a lot of new people. Shout out to new people. Shout out everybody who came to the stream. It was awesome. If not, you still got another week. I think of more excitements. Do the paper trading. I said do the stock trading boot camp over the weekend for a lot of you guys. Some basic stuff to get started. Get the paper trading, but I'm glad a lot of you, you guys have made money. You didn't, some of you, a lot of people, congrats. You didn't get burdened too hard. That's why a lot of you, I think, want to get the paper trading going on too. I love it. So stay in the game. Let me know what you guys are working with. Be safe. Maybe we do another stream. We might do one tonight. I'm thinking about it. I mean, you just better be subscribed, man. Get the bell on there. Love you guys. I'll see you every day still, but stream on Monday. Peace.